Kia ora Aotearoa. If you're thinking about buying a home, refixing your mortgage, or just trying to understand the housing market, this is something you cannot ignore. Mortgage rates in New Zealand are rising again. Here is the twist. The official cash rate has not changed. So why are banks increasing rates? Let us break this down simply. We'll explore the current rate landscape and the forces driving these changes. As of March 2026, most major banks have moved their one-year fixed mortgage rates to around 4.59%. At first glance, that rate looks stable. But when you look deeper, something interesting is happening in the current rate landscape. Major banks like ANZ, ASB, BNZ, and Westpac are all sitting around similar one-year fixed rates of about 4.59%. Banks are no longer competing aggressively on rates. They are moving together. This usually means one thing: pressure is building behind the scenes. So why is this happening? It's not just New Zealand. Global events are playing a big role. Rising fuel prices, geopolitical tensions, and global supply chain disruptions are all contributing factors pushing banks to increase rates. Even though the Reserve Bank has not changed the OCR, the cost of money for banks, that is, wholesale funding costs, has gone up. And when that happens, borrowers feel it. Let us make this real. It's important to understand how these rising rates translate into real money for you. If you have a $500,000 mortgage, even a 1% increase in rates can cost you significantly more. That's around $5,000 more every year, which is over $400 extra every single month. This is where people start feeling real pressure. Now, let's look at the broader New Zealand housing market context. Prices are still about 20% below peak levels. Demand is not strong, unemployment is rising slightly, and many Kiwis are still leaving the country. What we are seeing is a market that is not crashing, but also not confidently growing. It is stuck in between, waiting for a clear direction. So what should you actually do if you are buying or refixing your mortgage soon? If you are refixing, do not rush into long-term fixed rates. Short-term options like 6 months or 1 year may give you necessary flexibility. First home buyers, compare beyond the big banks. Investors, be cautious as rental yields are tight, and term deposits offer competitive returns with less risk. Before making any decision, use a mortgage calculator to truly understand your repayments. Knowing is always better than guessing. This is no longer just about interest rates. Global events are directly impacting everyday life, connecting the cost of living, housing affordability, and financial stability. The easy money phase is over. Do not assume rates will stay low. Do not rely on just one bank, and do not delay decisions. Kia kaha, stay informed, and make smart choices.